other asset classes, there were a lot of mixed cues coming in.
Absolutely. A very good morning to you, Shrishti. But let's not forget the way how the US markets traded in yesterday's trading session. A huge, choppy trading session. Banks were under immense pressure. This morning, you had the Asian markets, and we'll see a red across the Asian markets. You had Nikkei that had fallen almost 3%. You had Shanghai, Hang Seng, Kospi, all of them were negative territory. They were all of them seeing declines upwards of 1%. And when you compare to that, the Asian peers to the Indian markets have been pretty much resilient. Yes, SGX Nifty did indicate that we will be having a flat start, and that's exactly how we played to the script. We had a flat open coming in for the markets. Only in the last half an hour or so, we've actually drifted into the negative territory with the benchmark indices actually with the Nifty slipping below the 17,100 mark. 0.5% downtick coming in for the benchmark indices as we speak. But talking about the list of gainers, let me first start with the gainers because yes, we have a couple of losers as well. In gainers, you have Titan that is seeing an uptick of approximately 1%, over 1% as we speak. BPCL, L&T as well as Tata Steel, they are also the other set of gainers on the Nifty. While on the losing end, it is the Adani Enterprises that is seeing a downtick of about 7.5%. Key to note, all the Adani group counters are under pressure in today's trading session. Yesterday, yes, was a better day for the Adani group of names, but today you have a lot of them that are under pressure. So Adani Enterprises, top Nifty loser. Adani Ports, 3.9% is the top second Nifty loser today. You have Tech Mahindra, Bajaj Finance, UPL among the losers as well. If you look at the breadth of the market, it is in the favor of the declines, and Nifty Bank, that's the one that is underperforming the benchmark indices. 0.7% downtick coming in for Nifty Bank. Talking about the sector of sectoral losers, you have metal and pharma that are barely into the positive territory. They're actually flat with a negative bias. Let me put that. I was talking about BSE Metal Index, no doubt. Nifty Pharma Index, like I said, there you go, flat with a positive bias. Apart from that, all the sectors are in the negative territory with PSU Bank Index actually getting hit the most. So yes, the market picture right now is definitely weak. Shrishti, and let's not forget that Kunal had mentioned time and again, especially on Friday itself, the 17,200 will be an important support level coming in for Nifty, and that's what has been broken in yesterday's trading session. Today we've broken 17,100.
Well, yes, absolutely, Cheryl. And now for Nifty as well as Bank Nifty, we are trading way below its 200-day moving average as well. So key support levels getting breached for the Indian markets. But the big question that all of us wants to know is that whether 17,000, the ballpark number, will get defended or not, or we are expecting even a weaker session coming in from those levels as well. Let's try to find an answer from that. And for that, Kunal Bothra is joining us live into the studio with his analysis. Where does he see Nifty headed from here on? Take it away, Kunal.
Thank you so much for that, Srishti. So the bigger question is that where is the Nifty headed? So for that, we look at the analysis over the last 3-6 months of what the trends for the index have been, and then we try and forecast of how the markets could shape up. So even if you look at the more plain simple charts for the Nifty from the December 2022 highs, where the Nifty was almost at 18,800 levels, this was the point where the Nifty started to get into a topping formation. As you can see, for the last 3 months, 3.5 odd months, we've been falling into a perfect classic downward trending channel. I call it perfect and classic because at every point where the index has come back towards a bounce towards the resistance of this trendline channel, the index has taken resistance and gone into a corrective phase. And every time when the index has come back towards the lower end of the channel, we've managed to bounce back sharply, and those bounces have resulted into rallies of 400 to 500 points odd on the index. Now the critical part for the index, which we even flagged off yesterday, was there was this gap which had formed on the index. Now this is a gap which has not been filled for the index, and this would probably result into additional selling pressure. Gaps inherently leads to more selling on the indices. So what we've seen right now in the last 3 months is more of a structured selling. The panic has not yet creeped into the system. My sense is that if we manage to come back towards the lower end of the support channel, which is around the 16,800 mark, and if we break below this level, that's where heightened selling pressure could come back into the indices. So as of now, we are into a structured selling so far. I would expect 16,800 could be the next first level on the downside. But if we break below 16,800 mark, then I believe an aggressive sell-off could probably take out or happen into the Nifty as well.
Right, and actually, Kunal, on that note, we've had a lot of viewers already asking questions on the Nifty, and since I already have you, I believe Ashwin Anand's question has been answered because he's asked about Nifty has now broken its crucial support. Do you see the next bounce coming in from 16,800 levels? You did say if it goes below that, if it touches that mark, you may see further downside. Do you foresee any chance of bounce back also?
So that's what it should happen. So, based on this charts which I forecasted, that whenever the index comes back towards the lower end, there is always a bounce and then a further leg of correction on the downside. We've seen that happening over the last 4 months consecutively, 3 or 4 times. So even this time around, I think it should not be an exception that the moment we come closer to the 16,800-ish odd mark, I believe we should go into a process of a bounce. But that bounce should be used as an opportunity to exit longs or to create fresh shorts depending on the style of every investor.
All right, so that's the view on where the Nifty is headed from here on, and what should you do and how should you gauge the markets. But we also have Rajesh Agarwal joining us on the show. A very good morning to you, Rajesh. Yesterday, I really missed you on the show, given the fact that RRR won that award, the Oscars for the best original song. There's Natu Natu, and that has been one of your top favorite movies, where you've always drawn parallels to the markets. But now, what is happening in the markets? What would you term exactly? Which movie actually this brings it to your mind?
Good morning, Sharon. Good morning, Srishti. You said it right. Yesterday was a historic day for India as such, getting Oscars. Two Oscars, I would say, RRR and White Elephants. And that was tremendous, I would say. Yes, the markets have been falling since last 3-4 months. And I don't know how to term this because it's been relentlessly falling. So let's see how it pans out in the near future. But what I believe is these are short-term blips because there are cautious stance on the market because of FII outflows, China's reopening, or even moderation in domestic inflows of because of rising rate. 10-year yield is around 7.2, and that's a very disturbing figure, I would say. But going forward, I think Nifty can easily move up to 19,000 by year end. This is because we believe that there would be a 15% CAGR growth on the earnings side, and which would be basically driven by asset quality of banks, credit growth, etc. And there would be a pickup in capex activity. We should not forget that a huge amount has been allocated in the budget for capex, and that's going to add to the bottom line of the companies. So going forward, margin recovery in FMCG, metal, pharma, capex related capital goods industry is not ruled out. And if we look at the historic figure, BSE started by from 100 and it's rolling around 58,000 right now. And it has given a CAGR return of 14 to 15% in this time horizon. So if we extrapolate that, and maybe in the next 2-3 years, we will be sitting at a figure of 1 lakh. So these things do happen, these kind of frustrating market.
Oh, I think
this is a very good time to accumulate stocks.
Right, it's a good time to accumulate stocks. And if I have your feed, then Rajesh, I would like to ask you then, what should retail investors do to protect their wealth? You did mention good time to accumulate stocks. You're pretty bullish on the longer term prospect of the benchmark indices. You see Nifty at least at 19,000, given the fact that we will see a good 15% CAGR growth. So in this particular market scenario, what should retail investors do to protect their wealth?
See, in order to protect one's wealth, especially for the retail investor, I would say one should sit tight. These are opportunities to, these kind of times are opportunities to accumulate long-term stocks which we were not able to buy at higher prices. The pessimism is so high that people are trying to just get out of what they are having. This is not the right strategy. One should sit tight on their portfolios, revisit their strategy, look at stocks, whether the fundamentals are good or not. You should always remember there is dar ke aage jeet hai. Warren Buffett has said that one should be greedy when the market is fearful. So this is the time to be greedy and accumulate good stocks, I would say. Always remember, as I said, dar ke aage jeet hai. If you can take control of your fear. I don't fear, deny the fact that there might be a good amount of return you might be setting in the next 1 year, 18 months. So we have an example of COVID times when Sensex and Nifty fall to 9,000 odd levels, and then what happened, everybody knows. So it's a good time to accumulate stocks.
Okay, so in the weaker market, it's a good time to accumulate all these stocks. That's the advice coming in for all the retail investors. But with this, viewers, it's time to slip into a short break. But don't go anywhere. As we come right back, we'll be taking all your stock-related queries. So stay tuned.
Stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range, expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range, expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Start your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range expecting a
Welcome back to Buy Now, Sell Now, and marking the weakness in the markets now. Nifty is down more than 100 points onto the index level and just 50 points shy of that 17,000 mark. And will that get breached or not? We were just discussing before this break. And Bank Nifty is also showing weakness with a cuts of around 387 points. So this is where market is sitting at right now. Let's move on and kickstart taking all your stock-related queries. And viewers, do remember that we will be live on YouTube as well as Twitter. And you can also connect to us with on a WhatsApp number that will be flashing right on your screen. So let's move on. And the first question that I have, Kunal, is coming from Bhardwaj. He says that he has 50 shares of Sun Pharma and he averaged this counter at a price of 1,010 rupees. Can he add more at the current market price?
Well, I would suggest so that I think Sun Pharma is a better stock at current levels, and given the market circumstance where we are expecting the volatility to increase, it's always better to try and protect your capital into many of these pharma names. And I think Sun Pharma and probably Cipla are the two names which I still believe look more formidable and stronger at these levels as well. So I would suggest that yes, you can look to buy Sun Pharma, both in terms of the current market perspective as well as from a long-term view as well.
Right. Let's move on then. And the next query that I have, actually, let me get the query with relation to the Nifty and Nifty Bank and the indices out of the way, Kunal, because given the way how the markets are performing, definitely you have a lot of viewers asking those queries. We did speak about Nifty in depth in the first segment of the show. I have a query, one on where is Nifty Bank headed from one of our viewers. And there's another one who is asking specifically on Nifty Bank March futures for the short term from 39,700 levels. What are the levels to hold? 29 March futures Bank Nifty is what he's saying.
So I think, right now in the last 3-4 days, the pace of selling has intensified. So whenever you are initiating any futures trade, you have to always adjust towards the sentiment as well as the nature of oversold and how fast the index is getting into a sell-off. So there are two strategies which you can do. So assuming if you've shorted at 39,700 on the Bank Nifty futures, you're currently sitting in the money, that means in profits onto the sell trade. Ideally, because of the way the index has fallen the last 3-4 days, there could be a minor relief rally in play for the indices. So maybe a 200 to 50 point recovery for the Bank Nifty could not be ruled out, just purely based on the fact that the indicators have gone oversold. But if you're in from a stronger risk reward play, then I believe that there are higher chances that the Bank Nifty can further get into a sell-off mode, even breaking below the 39,000 mark and below that as well. So it all depends on how you would position yourself. If since you've entered late, I would suggest that you book out profits, wait for another bounce of 250 odd points on the Bank Nifty, initiate a fresh short. That will help you suit your risk reward. But if you're okay with initiating some higher stop losses and then looking out for more downside, then I think hold on to the trade, keep a stop loss of 40,500 on the Bank Nifty levels.
Okay, moving on, and Rajesh, coming to you for the next one. The question is from Kaushik Mitra, and he says that he already has shares of IRB Infra. He wants further guidance whether it's worth to consider IRB InvIT fund for fresh investment for the next 6 months to 1 year window.
See, IRB infra one can continue to hold because of the infrastructure story going on, but InvIT and equity are two different products at all. InvIT is sort of quasi-debt or a quasi-equity thing, I would say, that is for long-term investors. That's not for short-term 5 to 6 months or something like that. People looking for stable dividend income plus the return of capital go for InvIT. So if you are thinking of putting some more money at this kind of market, I think a better play in infrastructure would be going for Larsen rather than going for IRB InvIT or adding more to IRB.
This next one is coming from Tarun. He wants to know if Tata consumers can be accumulated between 700 and 600 rupees per share levels for targets of 800 to 850 is the target that Tarun is looking at. Kunal, do you think so?
Well, you can start accumulating. I think it's sub 700 mark, but I believe that there is a high probability that even that 600, 600 levels could also be entered into this phase of correction. The only reason I expect that to happen is because the indicators have not yet entered into a deep oversold territory for Tata consumers. So there could also always be a window down that the stock may get into a further corrective mode. Now, how far the correction can shape up, that is an ongoing course. The indicators may probably come back into an oversold territory, say closer to 650 mark or maybe below that as well. So that will depend on the pace of correction for the stock. But yeah, I think it's a good zone where you can start to look to accumulate. In case if the stock corrects by 10% approximately from current levels, then I think the probability is very high that the stock would enter into an oversold territory. And from there, playing for a bounce is a much more better strategy.
Okay, Kunal, once again coming to you. Deepak wants to know, is this a good time to enter into Hemisphere Properties and buy these shares, or are there any concerns and he should stay away?
I think you should stay away from such names, specifically in this kind of a market correction. Look at Hemisphere Properties from 2021 highs. The stock was almost at 200. Right now, it's corrected more than 55% from those highs. So it doesn't make sense to invest or buy into these names.
All right, that is Hemisphere Properties for you. But let's just take a detour quickly. And here are what TV Narendra of Tata Steel had to say exclusively to ET Now.
Thank you very much, Mr. Narendran, for joining us here on ET Now. You spoke in your session about the fact that climate change is not some distant priority, it's an immediate priority. But there were a couple of challenges also that were spoken about in that session, one of them pertaining to, of course, the cost effectiveness of the solutions, because we might be getting into a recession in the second half of the year, as most economists and, global banks have been predicting. So how feasible is the cost part of this move to net zero transition?
So obviously the transition is going to be complex and it's going to cost all of us money, right? Whether as a corporate, as a government, as a consumer, you need to pay more for green products, you need to pay more to produce green products, and you need to support industries to make the transition, right? So to me it's inevitable, but I think it's also an opportunity. Just like you had the internet economy over the last 30 years creating a lot of opportunities, a lot of business models, a lot of new companies. I think there's a lot of opportunity as well to solve the problems that we need to solve. And I think there are many companies coming into the space, and many industries will get disrupted because of this transition. So I see it as a challenge and an opportunity. I'd rather focus on the opportunity. On the opportunity, and I think very rightly said that opportunity can come via tech as well, tech-related solutions as well. But what are some of the key priorities that industries and, of course, corporates should probably look at seeing the macroeconomic disruptions? So one is, you're talking in the context of the climate change, right? Or transition? Right, transition. Yeah. Transition. So in terms of transition, one thing is clear. Europe has already started putting in the regulatory environment for a greener society, right? So that's going to impact all of us. If you're exporting into Europe and there's a carbon border adjustment mechanism, it's going to impact us. So we also need to be ready and for a world which is changing the regulatory environment in the context of these challenges. The US is also doing it with the IRA. So I think in India, we made a good start with our renewable energy goals. I think we made much more progress than we had promised, in international forums, so that's great. But I think now the policy environment needs to come in to help industry transition. I think the bigger companies will do it anyways, but I think we need to work more towards helping the smaller companies and the SMEs make this transition, because some of them may not really realize what's happening in this subject. Right, and at the end of the day, all the stakeholders need to come together to sort of move towards a common goal, which is, of course, towards net zero. But sir, coming to industry-specific questions, globally with China opening up, this, of course, this COVID pressures are easing. There is a slowdown and there is a pressure of sorts, but how do you see metal prices easing in that context? So I think just now metal prices are positive because China has come out stronger than most people thought. I mean, the Chinese GDP growth rates are inching upwards in terms of the forecast. First people said it would be 3%, then it was 4%, now they're saying 5%. And 5% growth for an economy of China's size is huge. So I think post the restrictions removed for COVID, the removal of the COVID restrictions, I think the economy is picked up. Obviously we'd like to see more. So metal prices have increased globally, but at least in steel, if you look at it, I think it's about $100, $150 higher than it was 3 months back, right?
All right, so that was the exclusive conversation with the top boss of Tata Steel, TV Narendran, with ET now on where the metal prices are headed, as well as talking about the green hydrogen and the greener environment. So on that note, we slip into a break on this edition of Buy Now Sell Now. We'll come back and take all of your queries. Don't go anywhere.
मैं हूँ आजाद
Towards 150 in the short term. They are actually going to make profit.
and analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
Broader market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range, expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
Broader market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range, expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range. Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus
Welcome back. You're watching Buy Now, Sell Now on ET Now, and let me continue taking all of your stock-related queries. This one is coming in from Akash Mathur. He's holding KPIT at 605, and he's saying that what should he do with this particular counter, Kunal? Should he continue to hold on to it or look to book profits? Because after rising to 800 or so levels, the stock is now down below the 800 mark.
So yeah, it's gone to a correction, which is a natural course for stocks. But then the correction has been far more, I would say, less as well as less volatile for the stock as compared to the other mid-cap IT names, which have fallen below their 200-day moving averages. I think at current levels of 776, it's also coinciding with the 50-day moving average for KPIT Tech. My sense is that just wait out for maybe another 1 day, because if the stock holds on to this 50-day moving average, there could be a possibility that the stock may bounce and then come back above that 800 level. So that could be a better zone to book profits. But then just wait out for maybe 1 more day and see how the stock holds on, if it holds on above the 50-day moving average or not.
Okay, moving on, and Rajesh, coming to you. Hemant has 22 shares of Prestige Estate and he entered this counter at a price of 478 rupees. He wants to know at what price he can actually accumulate or average this particular counter, and would you advise for that?
Advise accumulating at this point of time, because I've always maintained that real estate stocks as such are not for retail investors because of the inherent problems of inventory, higher interest rate, corporate governance and all those things. But still, Prestige Steel is a better play. One can continue to hold for a target of 430, 440 odd rupees. But adding at this point of time is not advisable. If it falls by any chance due to market conditions to maybe 370, 360 odd level, then one can think of adding.
Is coming from Indu Sharma. I'll take this one to you, Rajesh, because one, she's asking whether it's good time to accumulate Hindalco, and the other question that Indu has is the fact that she's making a portfolio for her 3-year-old son, and she wants to know what or which stock should she add in SIP every month.
See, coming one by one, Hindalco, yes, one can add. The numbers have been good going forward. The kind of demand being created, I think the company is going to do very well. One can have a target of 475, 480 rupees in the next 12 to 18 months. As far as SIP for a 3-year-old kid is concerned, I think sticking to the Nifty 50 stocks is a better strategy, out of which, sorry, I would recommend going for Reliance, ITC, Larsen, State Bank, and Dr. Reddy's. These 5 stocks, you can divide your money into 5 equal amounts in all these 5 stocks and continue with SIP.
Okay, Rajesh, once again coming to you, since you touched upon ITC. So the next question is from Suresh. He's holding 100 shares of ITC at a price of 351 rupees. Currently at a profit, so he wants to know, is this a good time to hold, sell or accumulate?
So it depends on your time horizon. If you have a long-term horizon, by long-term I mean 2 years down the line, it's a buy from our side. I have been giving a buy call since it was trading at 180, 170 odd rupees. And still it's a buy on our side because the fundamentals are very strong. The numbers have been good. Cigarette volumes have gone up. Hotels are doing well. Strong balance sheet, no debt. And the dividend yield is also very good at this price also. So I think it's all parameters. It's a buy from our side. Depending on your time horizon, you can take a call. If you are a short-term trader of some short-term investment, you can try booking profit at 400 odd levels. But I would still reiterate that it's a long-term buy from our side.
2 queries on Reliance Industries, Kunal. One is from Srinivasa. He wants to know about Reliance. He's bought at an average price of 24.50. He wants to know what sort of a target can he expect in the next 3 to 4 months. And on the other hand, you have Swayam, who wants to know whether he should accumulate Reliance Industries right now, or should he look to accumulate at the levels of 20 to 50 or so?
See, accumulating large cap names, first of all, is a very good strategy given the kind of markets we are into, because we know that large cap stocks are the ones which could not just stabilize or get into a less corrective zone with respect to the indices, but also there is a hard chance that whenever the markets bottom out, whether it's now in the next couple of weeks, the large caps would probably bottom out first, and they would eventually get into a rally. The other way to look at Reliance charts from long-term play is that over the last 2 years, I think from 2021 September or October levels for Reliance Industries, the stock has gone through a rectangular correction. 2200, 2250 has been acting as a huge support for the stock, and closer to 2750, 2800 levels is where there's a resistance. So when you are at the lower end of a time-wise correction, it's always better that you buy the stock. So on both the indications, whether it's large cap name, given the market scenario where we are into, as well as stock specific, given the charts for Reliance Industries, I think at 2200, 2250 mark, it's a good zone to buy the stock as well as accumulate.
Okay, Rajesh, coming to you for the next one. Subramaniam has bought 300 shares of Nelcast at a price of 93 rupees per share. Should he hold this particular counter or sell at these levels since he's sitting on profits?
See, I think one should try booking profits at this point of time. It's a mid-cap company, and the numbers, whatever it was, has already been discounted in the price. 105 would be a better level to book profits.
Okay, the next query that I have is coming from KR Balan. He has Rushil Decor at 405, Aether Industries at 925 rupees per share. Kunal, does it make sense to move out of both of these stocks and rather shift to SBI, BOB or Infosys for the matter of fact? Or make sense to just stay put with whatever he has for the next 1 year?
See, I think Rushil Decor as it is, I think if I'm not wrong, it's a low traded counter, very illiquid name, as well as the stock has been struggling for last, I think, many months, if I'm not wrong. So even, for example, today's average volume is so far just 14,000 odd shares, and the stock is at 300. So you can gauge the average turnover for the stock price. So I would suggest that you refrain from investing into these names. And I'm not sure what's exactly a purchase price, but I would suggest that you wait out for any rallies to try and exit the stock. Aether, on the other hand, seems to be a stock which is gaining a lot more strength, even though the stock is consolidating. But I sense that the two-wheeler pack, could probably get into a recovery phase, anytime soon. So I think for the likes of Eicher Motors, Hero MotoCorp, etc., even though the stocks have been underperforming, but the selling intensity has not been very huge into these names. So I would sense that this could probably be more of a time-wise correction. So you can hold on to Aether, but Rushil is something which I would suggest to exit.
Okay, but Kunal, once again coming to you, the question is from Vedanta, and she's holding over 15,000 shares of NBCC at a price of 52. She can hold this particular counter for the next 1 year. So what will be your advice for her?
See, I think holding on to the stock may be a good strategy, but I'm not sure that whether NBCC or such kind of names would be the first set of stocks which can get into a recovery phase. So given the kind of market scenario we are into, so there could be a probability that the stock may correct sharply and then come back again to the similar levels of 35-40 net. These are the kind of stocks which ideally would probably suit very well if you happen to buy these stocks at the lower end of the price curve and not in the midpoint or the higher end of the price curve. So you can hold on to the stock, but I don't expect, frankly, any major returns for the stock over the near to medium term.
All right. This one is coming from Sapna. She wants a view on Kirloskar Ferris because she's looking to enter afresh in this particular counter. How does this one look to you, Rajesh? Have you been able to take a look at the fundamentals of the company?
See, the prospects of the ferro industry is very good, I would say. Going forward, when we talk about metals going up, I think this company is also going to do well. One can expect a target of 550 odd rupees in the next 1 year.
Once again coming to you, Gaurav has bought shares of BDL 300 quantity at a price of 320. It's almost 3 times from the price he entered. What will be your advice? He can still hold this counter for the next 6 months.
See, again, I would suggest that you book out profits, majority of your profits over here, and keep a balanced strategy, balanced quantity as a trailing stop loss. That could be a good strategy for you, because the only point of concern is that these stocks have had a fantastic uptrend. The so-called defense names have had a fantastic uptrend the previous year, and it's bound to be that these stocks would get into either a profit booking or a time-wise correction. Whichever way, it always makes sense to book out profits into such thematic kind of sectors, and then coming back to the traditional large cap stocks. I think that's a much better strategy given the markets we are in right now.
All right. This one is coming in from Satya, and he wants your view, Rajesh, on which is the best pick now among the financial sector and the cap goods, or for the matter of fact, Infra space, which stock do you think stands out among these space?
See, in BFSI, you said, no? Right?
BFSI,
So
cap goods or infra?
Right. In BFSI, we have our best pick is Bajaj Finserv. It's doing well. Both its subsidiary, the insurance ventures, both of them are doing well. They have got 100% subsidiary in housing finance. They have got AMC license also. The NIMs are good. Asset quality is good. In all parameters, it's a good stock and it's corrected very heavily from its recent highs. So I would say this is a very good time to accumulate Bajaj Finserv in the BFSI space. In infrastructure, we would go for Larsen. That has got a very good order book. These quarter numbers were also good. Order inflows are going well. The hydrogen business is going to do well in the near future. I think in all parameters, Larsen is a highly undervalued stock. In CAPEX, we would suggest going for Siemens.
So those are the picks coming in from the cap good space. But Rajesh, once again coming to you, Preetham is holding 130 shares of IEX at an average price of 213. Is that a hold or sell with a medium-term outlook?
So for medium term, we have a target of 160 odd rupees. For a longer term, it can touch 180, 190 in the next 12 to 18 months. The numbers have been pretty good. In the last 2 quarters, the volumes have gone down because of various reasons, but with the kind of monopolistic position this exchange has on power and going forward with the kind of scarcity we are going to witness because of heat waves and all, I think this company is going to do well. One can continue to hold.
Club 2 queries. Kunal, this one is coming in from Mr. Ravi, who is a senior citizen. He's writing to us from Chennai. He has Gland Pharma at a price of 1160 and Reddington at a price of 165. He wants to know what sort of a target can he expect for them in the near term. And along with that, I also have Ajay Kumar, who wants to know whether he should look to buy Reddington afresh. Given the fact the stock has fallen, he wants to know, is it a good bet?
So I'll start off with Gland Pharma first. The stock seems to be forming a bottom over here at this 1170 mark, but I believe that the confirmation would be received only once the stock crosses above the 1300 level. So in case if you're looking to add, then add only above the 1300 mark, because that could be a point of confirmation that the stock has broken past above the previous highs and then now started to establish a major base for itself. So that's the view for Gland Pharma. For Reddington, on the other hand, the stock has come back towards or very close to its 200-day moving average at this 160 odd mark. There was this fantastic phase for Reddington where the stock outperformed. I think there were a couple of other mid-cap IT names like Emphasis, etc., which are also doing pretty well, if I'm not wrong. So the stock now seems to be coming back into a mean reversion. Good zone where you can look to buy. Maybe another 5 or 7 rupees down, closer to 155 approximately, could be a better bet to buy Reddington, because that would confirm a reversion towards its 200 DMA.
Okay, so that's the advice coming in on both these counters. But with this, viewers, it's once again time to slip into a short break, but don't go anywhere. We'll be right back. Hello and welcome. You're watching.
Predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
Motor market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range, expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range, expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range, expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let me continue taking all of your stock-related queries. And this one is coming from Aman Soni, and he wants to know whether it's good time to add banking, large-cap banking names, Kunal, like ICICI, SBI, as well as HDFC Bank. He's already holding them in his portfolio. And he wants to know whether he should add some more for the longer term. And let me add to this another banking name. So Manish Raju is wanting to know about IndusInd Bank, whether it's a buy right now for the short term.
See, as a theme, of course, these large cap private sector banks is something which would give you steady rates, well as strong returns over the medium to long term play. My only question or the concern is that the timing aspect, that maybe the bottom for the banking index as well as these large cap private sector banking names may not have been formed as yet. There could be maybe a correction of few more percentage points for these stocks. But frankly, from a long-term investor point of view, these few percentage points, they generally don't matter quite much. So if you're okay with that, then I think you can start accumulating at every dips which you can get. Keep a benchmark of every 5% dip where you can look to add or keep on accumulating these kind of stocks.
Okay, Kunal, once again coming to you. The question is from Saeed, and he's holding shares of Muthoot Finance from a price of 980 rupees. He's holding 100 quantity. Can he hold at this point in time is the question.
See, I think it's better that you shift from Muthoot Finance to Manappuram Finance, because Manappuram is something which has been very, very attractive. I think we spotted up the breakout for the stock sub the 100 mark. It's moved up to 117.18, then corrected back towards 108 odd levels. where it's trading right now. So I think maybe if it comes closer to this 100, 102 zone in this leg of correction, that could be a point where you may look to shift to Manappuram, because in the last 3-4 months, there has been a definite change that Manappuram Finance has gotten to a much more stronger relative strength as compared to Muthoot Finance. So it's best to stick with the performer. In that case, it's Manappuram Finance.
Okay, Nidhi Kulashri has a query whether she can add Maruti and Tata Motors in this fall, and out of the two, which one is a preferred bet for the longer term? It's a tough question, isn't it, Rajesh? Between Maruti and Tata Motors, which one do you think makes sense for the longer term?
See, it's a tough question, right? But out of the two, if I have to select, I would go with Maruti. The numbers have been good. Every month the numbers are coming. Auto sale numbers have been good. It's one of the companies that holds more than 50% of the market share in passenger vehicles. The new launches like Jimmy and all have been taken very well with the market. The waiting period is long. I think all in all, Maruti stands out when compared to Tata Motors.
Okay, Rajesh, the next question is from Bharat, and he wants to know your best pick from the banking and infra space.
In banking, I would say go for Kotak Mahindra Bank, that has not performed from quite a very long period of time. And with the kind of subsidiaries, etc., doing well, the conservative approach of the market, I think it's one of the best, I would say. There are many more names, but if I have to select one, Kotak at this point of time is looking good. And infra, as I said, Larsen is the best one.
All right, this next one that I have is coming in from Nino, and Kunal, he wants your analysis on Ganesha Ecosphere. His buy price is 600 rupees per share.
Well, so the stock is at 800, 830 levels right now, trading above the long-term averages. Decent trend for the stock. Again, a bit of an illiquid name or a low liquidity name, Ganesha Ecosphere. The trends are quite strong. So purely based on the chart strength, I would suggest that you can hold on. But as I said, it's a very less liquid kind of a name. So ideally, you should not have these kind of stocks as part of your core portfolios.
Okay, but for this, viewers, it's time to kickstart the rapid fire session. And Rajesh, the first question is for you. Coming in from Jitendra, he's holding 37 shares of Polyplex at an average price of 1720 rupees. Currently at a loss. What should he do?
If his funds allow, one can add. The fundamentals are very good. Dividend yield is very good.
All right, another one coming your way, Rajesh. This one is on Laurus Labs. Soumitra has written to us. He said you had advised add Laurus at 390 rupees per share. The stock has actually corrected from those levels. What's your view now? Has it changed?
No, it hasn't changed. The fundamentals are intact. Prices are corrected because of various other reasons rather than fundamentals.
Okay, Kunal, Mohit wants to know the advice on IOC. He is holding 1500 shares at a price of 77 rupees, but his time horizon is for the next 3 years. So your advice?
You should definitely look to hold.
Okay, Hemant wants to know what's a good price to buy Power Grid, Kunal, and also a target for the next 2 to 3 years?
Well, it's nearing a breakout to 30, I think approximately is a breakout zone for Power Grid. So assuming if the stock breaks above those levels, you should look to buy.
Rajesh Subramaniam is holding shares of Idea Vodafone, 500 shares at an average price of 8 rupees 30 paise. Sell or hold?
It's a sell.
Okay, best level to enter BEL or NALCO. This is from Sunita from Bangalore, Kunal.
Every dip, I think, is a good level to add BEL and NALCO. I think 5%, keep a benchmark of 5 starting from current levels to every 5 to 7% dip. Those are good levels where you can accumulate further.
Okay, Rajesh, Dave wants to know, is this the right time to accumulate eMudra or CESE?
CESE would be a better buy, trading at less than PE of 10. I think CESE one can be accumulated.
Kunal, Akshan has want to know whether TBZ Jewelers is a stock that he should add.
I would recommend not to do so.
Okay, Rajesh LRG Reddy wants the advice on GICRE. He purchased 1800 shares at an average price of 155 rupees.
Exit on rise.
Kunal, Stripta has AU Small Finance back at 600 rupees per share. What should she do? Average, hold, or look to add more?
Wait for further correction. Closer to 550 approximately is a zone to average.
Okay, but with this, viewers, it's time to end this session of Rapid Fire and wrap this edition of Buy Now Sell Now. Thank you so much, Kunal and Rajesh, for joining us today live and helping all our viewers with their stock-related queries. But for this, viewers, it's time to say goodbye from me and Cheryl and the entire team who put this show together. Thank you so much for watching.
kickstart.